Not all stocks move the same way. Some stay strong in any economy, while others rise and fall like a roller coaster. Which one should you invest in? Let's break it down. First, we have defensive stocks. These are steady and reliable no matter what. People will always buy groceries, healthcare, and utilities even in a recession. Example, Walmart. It keeps making money because we all need food. It has a low-risk beta of 0.52, meaning it doesn't swing wildly. Now, meet cyclical stocks. They boom when the economy is strong but crash when things go bad. Think about the cruise industry. When people have extra money, vacations skyrocket. But during a recession, cruise stocks plummet. Just look at Royal Caribbean. Its beta is a crazy 2.60. So, do you want safe and steady returns? Or do you like big swings with high risk? Defensive stocks are great for stability, while cyclical stocks can offer huge gains, but with more danger. Which one fits your strategy? Comment defensive or cyclical below. Subscribe for more stock market insights.